What's up guys, and welcome to this week's video where I will be breaking down the US dollar, Euro USD and USD JPY. So the major US dollar pairs. Looking at the US dollar at the moment, we are at a crossroads. So what that means is it can go one or two ways. I'm currently 50-50 on the US dollar. The market has only just opened up 2 or 3 hours ago. The first movement of the US dollar, we saw a move to the downside, which could mean we may see a wick to the downside for price to continue to the upside. However, we could break below this current area of structure for the US dollar. This is a daily level of structure and a key level. So it all depends on what price does from where it is currently now. Will we reject, create a wick, moving back to the upside, confirming bullish momentum, or will we break and close below, confirming a move back to the downside? If this does happen, that would mean the US dollar pairs would rise and would be bullish. So if we look at Euro USD, obviously we know Euro USD and DXY is inversely correlated. We can see the same scenario here at this resistance area. Will we reject, creating another wick to the upside for price to then continue to the downside, meaning Euro USD shorts? Or will we see price break above this area of structure on the daily time frame, close above, confirming bullish momentum and trend back to the upside? I am 50-50 on the US dollar and the US dollar pairs. It all depends on these daily levels. So what euro does right where it is now and what the dollar does from where it currently is right now. This is where patience pays. Because in my trading strategy, I do not enter trades that are 50-50% chance probability. It needs to be higher than that. And at the moment for the US dollar, everything is 50-50 because everything is sitting at major daily key levels. It can go one or two ways. It doesn't matter which way it goes because we make money on the sell or the buy. This is where people generally get trapped. They try and guess what the market's going to be doing, and then they stay married to that direction, and when they're wrong, they're less likely to close that trade and admit that they're wrong, which then will lead to large losses or an account blown. This is why it's so important not to have FOMO. It's Sunday today. So very early on in the week, anything could happen. And we have to remember that this week, we have a lot of news for the US dollar. Tomorrow we've got CPI, and then we have core retail sales. And on Friday, we have consumer sentiment. That could be the catalyst that will cause price to break out of these key daily levels. That is what we need to wait for. We need to wait for confirmations, clear confirmations, so that we can enter these trades. Anything before this, we're guessing. Depending on how today's daily candle does close, will be absolutely key. Will we close with a wick off this structure, or will we close full and bearish either on top or below the structure? This is a 50-50% chance probability. Anything could happen. We will not miss out. So do not have FOMO and just be patient. These are the times that trap 90% of traders. Don't be a part of that 90%. It pays to be patient, as I reiterate every single day to my students. Now let's go back over to Euro USD. On the 4-hour time frame, it's obvious as well, we have a major level of structure. We are above this 200 EMA. And depending on how this 4-hour closes, I think will be another key sign on what the next 4-hour candle actually does. We break above and head bullish. We can see looking left, there's an area of structure directly sitting at this level. I will be keeping this zone open. Or if we wick and start moving to the downside, there is a 4-hour level of structure sitting right here as well. There is two scenarios for Euro USD and the US dollar. It will either be bullish or it will be bearish. We will just have to keep these levels marked on our charts and open. I will be looking for price to create some form of corrective wedge. For example, if we see a descending wedge to the downside and it is acting in a corrective manner, and we see the wedge, that is a high possibility that price is looking to bust back to the upside and turn bullish. If we see the opposite to that and we see price correctively moving in an ascending wedge, price may be looking to break out to the downside. Here's a perfect example of an ascending wedge. To the upside, price broke out to the downside with a lot of intent. We met these equal lows, filled, price then broke out to the upside. If we look left, we'll be able to see all of these sorts of things happen. Another ascending wedge, price obviously moving within this ascending wedge to the upside. We had the breakout, confirmation, liquidity collection to these equal highs, and we broke down. So these are the sorts of moves that I will be waiting for to confirm where we will actually get that breakout. Will we get the rising wedge confirming a bearish breakout, or will we get a descending wedge confirming a bullish breakout? That can take days, guys. And if that's what we have to do to catch the right direction, then so be it. It only takes 1 or 2 trades to have a very successful week, even a very successful 2 weeks. Quality over quantity. This is why we need to continue to be patient, and I'm going to keep saying it. Sometimes we forget it, or we choose to forget it or ignore it and give in to our old habits, jump into the wrong direction, either buy at a high or sell at a low due to emotions, and then we get stopped out, or even worse, we move our stop and our account is blown because we're too fixated and married on that one direction. That's what we need to avoid. That's what I'll be waiting for on Euro USD. It all depends on this area where it is right now. We need to wait for the break above or the break and close below. Much the same with the dollar. 4-hour time frame. Will we break below this area of structure? The EMA is sitting nicely on top. Lots of confluences. Will we break below, confirming that bearish move to the downside? Or will we continue to reject, moving back to the upside? We have to remember as well, we could move to the upside. There's an area of structure sitting directly here on the 4-hour time frame. We could see price collect liquidity, consolidate for a little bit. On the smaller time frames, we may see bearish candle closures. And if it is bearish, we may see an ascending wedge into this level of structure, strong confluence to support US dollar sells for price to break to the downside and then breaking this area of structure. There's 2 scenarios for the US dollar. It is still extremely early on in the week, might not break out until the end of the week, and that's fine. If you trade the US dollar, you know how aggressively it can move once it has a confirmed break above or below. We've seen this over and over again. Same thing happened here, guys. Another great example of this, of a breakout. We had a descending wedge right here into a strong level of structure. Looking left, continuous areas and liquidity. That is a strong level of structure. Then we saw price move in a corrective manner within this descending wedge. And look what happened after that. Huge move to the upside, a lot of volume, a lot of intent. If we ignore that this move happened, could have seen so many confluences to support this US dollar bullish move. Descending wedge moving in a corrective manner into a strong level of 4-hour structure. We also had a double bottom. Price filled the equal lows and pushed back to the upside aggressively. A lot of confirmations, at least 4 to 5 confirmations to support this US dollar bull move. That is what we want to see happening right now. And it will be worth the wait, the sort of move we want to catch. We do not want to be in this choppy momentum. It's not worth it. 50% chance trade until the confirmations align and we can then enter the trades when we see something like this. And if you go back and look left at any pair, you will see these confirmations happen over and over again before a true move breaks out. And that is the moves that we want to catch. And these moves don't happen every day, but when they happen, it takes 1 or 2 trades to catch that direction to make an entire week, sometimes an entire month. So it's worth the wait. Switching over to UJ, we can see on the daily time frame, price has been in an uptrend, creating higher lows and higher highs since January 13th Could this be another new higher low? Or are we actually going to see price start trending back to the downside like we have seen in this entire leg? Same thing, guys. It will all depend on what this daily candle does. Will we close below this area of daily structure, or will we sneak back above? And if we close back above, we can create equal highs up here with a potential for price to move back to the downside. Of course, price reacted here. Look left. Look how strong this is. Look how strong this level is. Strong level of daily structure. And if we extend the box even further, we can see this level, these highs sitting directly on top as well. So you really just need to look left to find those strong key levels of structure. First things first, we will need to see how this current daily candle closes. If we close above, we may see more bullish momentum. If we wick above and close below, we can expect to see more downside for USDJPY. There is an area of structure sitting directly at this level. And if that happens, from where price currently is to that level of structure is 300 pips. So a large move indeed. It is going to pay to be patient again with this pair, because it is currently at a major daily key level. Another 50% chance probability. Anything could happen. It's very early on. Leave these levels of structure open on your charts and always react in live time. That's the best thing we can do as traders. We aren't always going to be right. There's not one trader on this planet that is right with their trades 100% of the time. And it's okay to be wrong. If we have good risk management principles in place in our strategy, a loss here and there will not hurt our accounts. As long as our strategy wins the majority of the time, we can be profitable and rely on it. Take the ego away. Don't be married to one direction, because we can make money in either direction. We just need to be patient and wait for the right opportunity to catch the right move. And that's what we need to do this week early on. Anything could happen with the news, especially during CPI. We know how crazy the moves can be in CPI. We could get that liquidity collection before the true move begins. So that's it, guys. I want to wrap it up there. I have all my links in the description below. If you want to be part of my community with my students where I release videos every single day, I break down a lot more pairs than just these 3 pairs. But if you want to learn further, please reach out and I'd be happy to give you information and you can be a part of the team. Feel free to look at my other videos that I've already created. Don't forget to subscribe, like this video, share it, and have a great day.